Here's a midday update for January 28th, 2011. If you look at the S&P 6-month chart, the drop today doesn't look all that significant yet. It looks like a simple flat, an ABC flat uh, from the past month, which would be A and then B, and today would be a C down. Worst case scenario is that we're retracing the move from 1172 to around 1300, which would mean it could drop to as low as the previous four, around 1250 at worst. That's my first target after. If we break through 1272, the next target I have to the downside is 1250. For NASDAQ, yeah, it looks like we completed 5 waves up from November lows. Wave 1, Wave 2, Wave 3, Wave 4, Wave 5. And this could be at least a flat. We took out 2687 to the downside. So I'm expecting the first support level to be around 2650 or the previous four. So close at the lows, we'll probably see a test of 2650 in the coming weeks, or the coming days, even. For the Dow, look at the diamonds. Looks like wave 1, wave 2, wave 3, and this is at least wave 4. Uh, wave 2 would retrace back to as low as 11,550 to the downside at worst. That would retrace the entire move from the November lows to the January highs. And best case scenario is that it's a wave 4, but it would still retrace to the around 11,550 at worst. That'd be the worst case scenario. And the good thing about this drop though is the RSI is resetting back down to near 50. It was hovering around 80 for a while in the Dow. Now the RSI is around 60 or 55. Let me check S&P. Yeah, yeah. The RSI in S&P is actually down to 50, which is a which is approaching oversold in one day. That's pretty crazy. Nasdaq, let's see, RSI. Yeah, the RSI is below 50 in Nasdaq. And in November, the RSI reached about 45, and then we started another big rally. So this could be just a short-term blip. Nothing. I don't think it's the beginning of the end of the world, Armageddon. I really don't think that is. I think it's just a wave two to retrace the November rally up to January. That's a wrap.